All right, Chapter 14, Work Together and on your own. We'll just probably do work together to save time. I'm on page 335 of the textbook. The instructions read, Metro Company's payroll register has the following totals for semi-monthly payroll dated July 1 through 15. And they want us to do some work on T accounts, but we're beyond that. We don't need to do that. We're on page 15 of the journal. So I'm going to put page 15. It goes in two places because this journal is so wide. It probably takes 2 pages. So we're going to journalize the payment from July 1 through 15. So the day of the transaction would be July 15th. Now, for the first, we're journalizing payroll. So we're going to debit salary expense. That's the name of the account that gets debited. This is a check. We're writing a check into the payroll account 455. It's going to be a general debit of $12,600. That's the amount that goes into salary expense. That's their total gross pay for the period. The amount our check is going to be is $10,206. That's the net pay for the period. No, I'm sorry. This is total earnings. This is total earnings for the period. Excuse me. Now, we're going to list our taxes, the taxes that we as an employer has to pay. First one is federal. I'm going to abbreviate some. Federal income tax payable. That's the first tax. 1,386 we've taken out of our employees. The next is the Social Security tax payable. We match these dollars, so whatever our employees pay, we basically match what they pay. And the last one is Medicare tax payable. Again, another one that we match, and that's how it works. Half the employee pays, half we pay. $189. Okay, so we've got one debit, and we've got 4 credits that all add up. So we're in balance, because if we added our credits to this, it would come out to that. So that's how you do 14.1, recording payroll taxes. Next, 14.2, you're going to turn to page 340 in your textbook. And it says, we're going to switch down here. I don't do a good job down here of including, can we see that? Yeah, 14.2. Oh, not application. We're still on this. Sorry, we're going to put all this in the same journal. My bad. So it says, it gives you some information, and it says calculate the amount of earnings subject to unemployment taxes. Unemployment taxes, remember, are capped at $7,000. So once an employee has made $7,000, they no longer have to pay into unemployment taxes. Number 7 says, I'm doing the wrong one. Calculate the amount of employer payroll taxes owed for this period, May 1 through 15. Use the employer payroll tax rates shown in this chapter. Journalize their payroll taxes for the month and record them as of May 15th. Okay, so we've got our first employee here is Tamela Beltran. She has made $5,100. This pay period she made $637. So we have to take that full $637 and calculate how much she owes. Well, Social Security tax was what? Oh my goodness, I forget already. 0.8%? No, that's unemployment. Social Security is back on page 336, and it is 5.4, no, 6.5, and Medicare is 1.5. Sorry, just remembering these silly rates. Her unemployment is 0.8% and 5.4%. So we would take and calculate how much she owed for each. She's the only one that has to pay because, as you can see from the book, Irma Cintron, the other employee, made $7,350. So she does not have to pay into unemployment tax. She's capped. But she would still have to pay some Social Security and Medicare. Just no unemployment. Okay, so the transaction for this period dated May. This is crazy. We're putting May 15th under July 15th, but we're just using the same journal to make it easier. Okay, this is a different account. Now, this isn't salary expenses anymore. This is payroll tax expense. Payroll taxes expense. This is not a check. We're not writing this check to anywhere. We're just recording this transaction. And the amount, the total amount, and I've already calculated this. This is for those two employees. First one is Social Security tax. Social Security tax payable. Remember, that rate, both of them have to pay it, is 6.5. Their total earnings, according to the book, you have to add them up, $637.50 and $920, and times it by the 6.5%. They would have to pay $101.24. Medicare tax payable is 1.5%. So you take their total earnings again, which is the $637.50 and $920, times it by 1.5%. Their Medicare tax payable would be $23.36. Now, you got two unemployments. You got unemployment tax payable Fed and unemployment tax payable state. Now, remember, only our one employee, Tamala, has yet to make $7,000. So she's the only one, and hers is $637.50, and the federal rate is 0.8. So you take her total, 0.8, and she pays $5.10. And for the state, it is 5.4%. So 5.4% of her $637.50 is $34.43. So this debit to payroll is the sum, I can use the auto sum feature, of all of these. So it's $164.13. That's how the transaction works. Payroll tax expense, and then each of the 4 payroll taxes. Okay, I'm going to pause for a minute, come back. All right, guys, we are going to skip over the work together and the on your own for section 14.3 because it is filling out a form 941. Okay, it does not have to do with any journalizing transactions. So we're going to skip that. Skip 14.3, and we're going to go on to 14.4, which wants us to prepare the journal entry for the payments of the taxes that we have been withholding from our employees. Okay, so the first one says prepare a journal entry for payment of the withheld taxes on the date of April 15th. So, first transaction, and then we're going to prepare journal entries for the payment of the federal and state unemployment taxes. Those are done, I believe, later. So the information you need is on page 351 of your book. So the first transaction is dated April 15th. And we are paying employees income tax payable. So these are the taxes that came out of the employees. This is going to be a check number 383. Now we're going to have the employees income tax, that's the federal. Then we have Social Security tax payable, and we have Medicare tax payable. Those are the three that come out of the employees. So we take the totals, and the totals are provided for you, like I said, on page 351 of your book. 1,386, 819, and the last one was 189. So the total of all of those will go in the cash credit column, and it is $3,402 is the total. Then we have two other transactions, and they're going to be on the 30th of April. The first one is to Unemployment Tax Payable Fed. Choose that one. Unemployment Tax Payable Federal Government, and that's check number 401. And the amount that I took out of my employees this year is provided in the book. It's $100.80. So that's debit, and the credit goes to cash. And these are just, again, we're closing out these accounts that we had started in the beginning of the year, accumulating how much we owed into the federal and state government. So this one is $680.40. Okay, so that's the end of the instructions for the work together problems for chapter 14.